If money matters to you, this is your door. I'm going to get a lot of pushback for saying this, but if you are still holding cash in 2026, you are already losing. And most people won't realize this until it's too late. Cash feels safe, but right now it is quietly losing value every single day. And when you're waiting for the perfect time or for the economy to get better, others are quietly growing their money in ways that you haven't even considered. Hello, I'm Ri, and this is Money Time with Ri. And on this one, I talk about how to make money, how to invest smartly, and how to avoid financial mistakes. If this stays to the end of this video, you know exactly how to protect your cash, put it to work, and start multiplying it in 2026 without guessing or falling for the get rich quick traps. Here, most people don't understand. Holding cash is not neutral, it's actively harmful. Inflation is eroding your purchasing power. How do I mean? Money that sits idle today buys less tomorrow. Interest from traditional savings account is almost meaningless compared to diverse opportunities in the market. Most people are waiting for the perfect signal before they invest, but opportunity moves fast and hesitation costs you more than risk. People are consuming content, learning about opportunities but never acting. Others are chasing trends with no strategy, thinking they are smart. Both approaches keep cash stagnant and dreams small. By the end of the video, you know exactly where to put your cash in 2026, how to split it strategically, and how to make sure it is working for you instead of quietly losing its value. So the two solutions I'm making here is split your cash into strategic buckets. Split your cash into strategic buckets. When I talk of splitting your cash, I don't mean open different accounts and put your money in different accounts. No, that's what I mean is emergency funds, investment funds, opportunity funds, side hustle funds, etc. Now, talking of emergency fund, I think 30% to 40% of your income should go into emergency funds. Keep enough to cover 3 to 6 months of expenses in a high interest savings account or government bond. This is your safety net. For your investment fund, 30% of your income should go into your investment funds. Buy stocks, ETFs, or mutual funds. Example, 300,000 naira in a diversified index ETF tracking S&P 500 or NASDAQ. Even a modest 5% growth over a few months beats inflation. For opportunity funds, I feel 20% should go into opportunity funds. High reward plays like altcoin, fractional shares, or seasonal business opportunities. Only invest what you are willing to risk. Please, only invest what you are willing to risk for your opportunity fund. So for a side hustle / business funds, 10% should go into your side hustle or business funds. Subscription-based services or AI tools that generate recurring income. How this works: splitting cash reduces risk, maximizes opportunities, and ensures part of your money is always growing. The mistake people make is throwing all their money into one account or one investment thinking it is safer. Man, it is not safe at all. Second point here is invest in low risk, high reward assets, treasury bills, and government bonds. This is secure. Predictably, it returns about 7 to 10% annually. Under low risk, high reward assets, we have dividend paying stocks. This gives cash flow while the principal grows. Example, buy 2 to 3 reliable dividend stocks with quarterly payouts. Still under low risk, high reward asset, we have index ETF. So in index ETF, you spread risk across multiple companies. This mitigates volatility. So this is for people who want growth, not gambling. Why this works? These instruments protect capital. They protect capital without letting it earn better than inflation. The misconception here is people only thinking low risk means doing nothing. Passive cash lost value, low risk investment grows stable. So the 2 points I'll be making in this video is position for short-term growth. Use 10 to 15% of your capital for calculated high return opportunities, altcoins or crypto projects with real adoption, fractional shares in big cap stocks, early stage business opportunities. And why this works? Even small allocation to fast-growing sectors allocate wealth quickly. And the common mistake is people jumping into hype without proper research. Risk management is. The whole point here is make money work while you sleep. Make money work while you sleep. And when I talk of making money work while you sleep, I'm talking of automated investments. I'm talking of dividend reinvestments. I'm also talking of micro businesses and subscription models. I'm talking of weekly or monthly contribution to ETFs or mutual funds. For dividend reinvestment, that is compounding growth automatic. For micro businesses and subscription model, we're talking of AI services, dropshipping, or content tools that generate recurring income. Look at this military study. Someone invested 200,000 in an AI content tool, sold subscription to 16 small businesses in 6 weeks. That then 200,000 would have lost value by just sitting in their bank account. The point I'm making here is stay informed and stay ahead. Stay informed, stay ahead. Track markets, trends, and emerging opportunities weekly. Follow analysts, investment communities, and financial newsletters. Focus on data-driven opportunities, not hype. For anyone that is serious about making their money work and avoiding stagnation, what this for, it shows that you're serious about taking control of your money in 2026. This is your sign to like this video, comment, and subscribe to this channel. Let me talk about the objection and myth that hold people back. The first one is, I'm too late. No one starts at the perfect time. The best time is always now. The second one is, I don't have money. Even 50k allocated wisely compounds more than sitting idle. The next one is, this won't work in my country. Well, global markets, ETFs, fractional shares, they are all accessible from anywhere you are in the world. Pick one step from this video and start this week. Split your cash, make your first low-risk investment, or start a small recurring side hustle. Stop overthinking and start positioning your money for growth. I wasn't even going to say this, but one of the fastest ways to leverage cash in 2020 is through AI micro investments. Tools that analyze data, allocate funds automatically, and give you growth while you focus on other things. Most people don't even know these tools exist yet, but early adoption compounds advantage. If you apply even one step from this video, you're already ahead of a lot of people watching YouTube today. Thank you for joining me on today's episode of Money Time with you. I hope you learned something new and valuable. Don't forget to subscribe, like, comment, and turn on the notification bell to keep you updated. And until next time, stay financially fabulous.